Hello, everyone. This is Ed the Finance Guy. Appreciate you tuning in. Today, I want to speak about some emails that I got from people. It was regarding opening your own business. Now, during this COVID, a lot of people have been laid off. There've been a lot of furloughs, and people are working out of their house. They're saying that that's going to be the new wave going forward. People will always be working out of their house. So a lot of people want to know, what do you have to do to open a business? So you call your accountant, which of course would be me most of the time, and you ask, how do I open the business? What do I have to do? What's the steps? What exactly do I do to open my own business? So first you have to come up with an idea of what you'd like to do. You want to be a dog walker, you want to be a bookkeeper, you want to do IT. What do you like to do? What is something you enjoy doing that you don't mind doing all the time, that you feel that you can maybe add to someone else's business? You can help them grow because you know something that they don't know, and you probably could do the work right out of your house. Especially if you're a bookkeeper, people email, text information to you. You update it in QuickBooks or whatever program you use, and then you would send the profit and loss schedule to them at the end of the month. So you really could help a lot of businesses. So if you have the talent, you know how to do it. You know how to, if you want to be a paralegal, you first have to decide really, what do you want to do with the rest of your life? What kind of job do you like? And go for it and learn as much as you can about the topic. Then you have to decide what type of tax structure you want to have. Now, the three different tax structures are a Schedule C, which is not a corporation. You just work for yourself. The schedule goes on your tax return, it's part of your 1040 return, and you would put all your income, your expenses, you come up with a net amount, and whatever that net amount is, you'll pay taxes on it. Besides paying federal and state taxes on that, you would pay 7.65% Social Security, but because you're the employer and you're the employee, you have to double that number. So instead of taking 7.65, paying it to the government, you'd have to pay 15.3. So for some people, they're not happy with that. It's too much taxes. There's liability when you don't have a corporation, more liability than when you have a corporation. So people decide they don't want to do that. So the second choice would be to incorporate. Usually when people call me to incorporate, I don't actually do the work. I call a firm in Albany, a law firm, and I incorporate. And I ask my clients to give me 3 different names, because what they do is they check the first name to see if it's available. If it's not, they go to the second. If it's not, they go to the third. And of course, you can't have a name similar to another corporation that's in existence in New York. So I'll call clients back. The second name you gave me is good. We'll go with that name. Once we have a name established and you want to incorporate, I would turn around and say, well, there's 2 different types of corporations. One is a Schedule C and one is an S corporation. The difference is when you have a Schedule C, you're paying a percentage, 14%, 16%, whatever your profit is, you're paying that to the government. When you have an S corporation, you really own shares in this corporation. So an S corporation, if there's a profit, you don't pay any federal tax. The amount of profit or loss gets moved directly to your personal tax return on a K-1 schedule. So very often people like that because the corporation, it keeps you away from any liability. If you get sued, if you have any kind of problem, all they can really touch is the assets of your corporation. So you're not going to put your house in the corporation. You're going to have very little assets in your corporation. So if you ever have any kind of a lawsuit, a lot of times you hear people closing their corporation out, and that's the end of the lawsuit. So you do have protection from getting sued. So that's a good benefit. And when you have an S corporation, very often, if you show a loss, you could move that loss to your personal return and possibly get a refund. So there are benefits, something that you should really discuss with me or your accountant, and this way you know exactly which type of structure you should set your business up. The third one, which always gives a lot of people concern, and half the world thinks it's good to use this way, and half thinks it's not, it's an LLC. An LLC is a limited liability company, which gives you the right to decide how you want to file your return. You could file your return as a Schedule C, you could file your return as a corporation, you could file your return as a partnership. If you only have one person, it's just you, obviously the partnership is ruled out, you would file it as a Schedule C or as a corporation. Now, it costs a lot more money to open an LLC because with an LLC, you're supposed to advertise it in a newspaper. So if you look at a Sunday New York Times, look at the back of the paper, you'll see all the different people that are opening an LLC saying, I just want to let you know, I opened an LLC as of this date, and that's something that you have to do. And to advertise in Newsday could be $800-900. So very often an LLC could be anywhere from $1,000 to $1,500. Corporation could be anywhere from $250 to $500. So it's about 3 times the price to have an LLC. In my personal opinion, unless it's real estate, I probably would not do an LLC. I would just do a corporation, have the money come in, go out, an S corporation, hope to show profit, loss, whatever it is, that would go right on your return. And then you have all the safety and protection of being incorporated. Once you decide what type of structure you want, then you would apply for a federal ID number. Now, a federal ID number is separate than your social security number. It's the way the government knows that you have a business and this is your number. So when you call up and say, I'm with ABC Corporation, the IRS doesn't know what you're talking about. What's your federal ID number? So you have to go online and apply for it. It's very, very simple. irs.gov, and just punch in applying for a federal ID number. So now when you walk into a bank and you want to open a corporate checking account, they're going to want to see certain documents. One of them is when you incorporate, you get a big black book. It's called a Black Beauty. And in that book, you have shares and you have different minutes that you're supposed to fill out, the minutes of the corporation. If you elect a shareholder, or you have a corporate officer, or you have 3 people, one person's going to write checks, one person's going to make certain decisions. That all has to be itemized in the corporate book. So you're going to walk into the bank with that corporate book, which they never even look at, but you need to have it. A certificate of incorporation that you're going to get when you incorporate. You need a filing receipt, and it's called Articles of Incorporation. So really, it's 3 items. You're going to need the federal ID number, the Articles of Incorporation, and the filing receipt. Those 3 documents, along with the black book. And when you walk into the bank, they'll take all the information. They'll take your name. They'll ask you who the president is, who the signing people that are allowed to sign the checks, and then they'll give you a checking account. So any money you deposit in the checking accounts gets considered sales, unless you tell your accountant, it's my own money, I invested, then it's not sales. That's the way you're really going to keep track of everything that's going on in the business. People are going to pay you for your services. You're going to write checks for expenses. The bottom line is the profit. One of the things you may be able to do is you could take salary. If you're doing well enough, money's coming in, you would take salary. When you take salary on a corporation, you have to remember that you need certain things. One of those is workers' compensation. Workers' compensation is one of the most important things you can get when you're in business, if you have employees. Now, if it's just you and you're the only one, you're the only officer, or your wife is also an officer, you're able to say, you know what, I want to opt out. I don't want the workers' comp. I don't need it. It's my company. If I get hurt, I'll deal with it. I have my own insurance. So then you don't really need workers' compensation. But before you hire an individual that's a worker, you must have workers' compensation. If you don't, the fine could be $10,000 for not having it for 10 days. It's ridiculous fines. One of the cheaper companies that I use is State Insurance Fund, which you can go online and you can find out what their rates are. Generally, their rates are cheaper because they don't pay any commissions to insurance brokers, which is why insurance brokers don't want to sell State Insurance Fund workers' comp. But it's something that you need. If somebody gets hurt and there's a $100,000 claim, you're covered. Now, again, you do have a corporation, so the only thing they could really grab from you is your assets of your corporation. But if you don't have workers' comp, the fine is huge. And if you get fined, you're personally liable. So you can't just close the corporation. Forget about it. So workers' comp is a real big problem that people have when someone gets hurt and they don't have it. They don't have the policy. It's really tough, a tough item to get around. You really can't get around it. So again, just to recap, you want to open your own business. COVID happened. You don't have a job. Things are bad. You got to decide what you're going to do. You have bills to pay. They aren't going to stop. So you decide what type of a job you want to do, what type of a service you can provide to other people. Then you decide on what your tax structure is going to be, corporation, LLC, Schedule C. You get a federal ID number, and you end up going to the bank with your Articles of Incorporation, federal ID, filing receipt, you open an account. You decide, wow, things are getting really good. I'm going to hire 2 workers. Before you do, get the workers' comp policy, and then you'll be set. And if you do open a business and this has helped, I'm very, very happy to hear it. And I hope you do really, really well. Again, this is Ed the Finance Guy. I appreciate you all tuning in. Like, share, and have a very, very good day. Thank you.